and welcome to Growth and Value Stocks. My name is James Boyd. We welcome you here today. We got Connie Hill with us in the chat. We welcome her as well. We got Janelle with us, JDHCZZ, Dom, Jay Richardson, Olga, Sam Flanagan, Paul, Wacky Wax 6650, and many others. Welcome to all. Now, just real quick as we're getting started here, want to give us a quick reminder that sometimes we focus a little bit more on growth. Sometimes we talk about value. Frankly, there's a case for both right now. Our comments here today are going to be a little bit more on growth since NVIDIA has its earnings here today. And also I want to talk about some of the earnings reactions we've had, like on Target, et cetera, and kind of talk about the strategy of that. Now, just real quick as we get started, remember that we do post, this session is being broadcast via YouTube. If you went to YouTube, Trader Talks, Schwab Coaching Webcast, you'll actually see that there. You can also subscribe for free. So just real quick, a quick reminder that there's also playlists for this class. And you're going to see that last week, Mike Fairborn, he taught last week. And you're going to see that class that he taught is right there. And 2 weeks ago, we talked about stops, okay? And that was 2 weeks ago. And you can see that playlist. So make sure you're aware of that and bookmark those. Now, just real quick, as we get started here today, remember the information I talk about is done for general informational purposes only. Also, when we talk about examples, we're going to talk about technical analysis. Schwab does not recommend the use of technical analysis as a sole means of research. Fundamental analysis, intermarket analysis, macro analysis is also very interesting. And so make sure you kind of over time open up to kind of different ways to kind of look at markets in general. Also, our examples would be done in the paper money software application. And also remember, when we talk about examples, investing involves risk. Now, we're going to talk about these different styles. Again, a little bit more focus on growth here today. We'll take a look at some examples on the platform as far as past and new examples. Now, as I was looking at the paper money account here today, now I'm not sure if you're aware of this, but normally when we go over here on the platform, we really have things broken down by strategies. Okay, it looks like this. It's like a folder of strategies. Well, if you come over here to the right-hand side, you're going to see 3 lines, and it's going to say old layout. And this is just kind of your classic. It's just stating your inventory being what positions do you have. So first thing what you'll notice is, that might be a little surprising, there's not that many positions. That's true. Now, we would probably kind of know that a little bit because we got about $160,000 cash. We really got 1, 2, 3, 4, 5, 6 positions. That's it. 6. Okay. Now, margins is totally different. That's not necessarily true. 1 position, 2, 3, 4, 5, 6, 7, 8, 9. You got 9 positions. So by the way, cash is also pretty high. So this is almost like going back to like last December, when we actually kind of re-hit the portfolio, reset it, so to say. And I got to say that, here we are almost 6 months later, and it's almost like we're rebuilding a portfolio. Last week was the time of the month for you know what. And so if we had a lot of those positions that have expirations to them, well, they dropped off. And that's kind of one of the cons, is that they drop off, okay? Or they could. Now, today, I want to kind of focus about kind of rebuilding some positions in the portfolios. Now, first off, I want to take just a quick look at where the market is here. And we'll talk about kind of putting some positions back to work here. By the way, this is something that gets brought up quite a bit, which is, okay, my trades, they either won or lost. How do I reestablish positions that I won in the portfolio? The Dow Jones here today, up 331. 0.7%. The comment I'm going to said yesterday, but I'll re-say, the longer we hang up near this area of resistance, the greater chance we could potentially break to the upside. If there are sellers, there's not that consistent selling so far here on the Dow Jones. The SPX, if we take a look at that, we know we've been in this slow drop. We said yesterday the drop so far had not really been severe. And it's sometimes you can just have these little short, shallow pullbacks. And so far, we haven't broken above the 10-period moving average, not yet. But just if there's hard selling pressure, it's really not come out viciously. If we look at the volatility, if people are really panicking, okay, we're not seeing it in the VIX. Now, by the way, as bullish investors, let's say we are, do you want to see the volatility go up in the short term? Not if you have positions, okay? Now, this also kind of goes back to the point of looking at the crude oil, which is something we've been watching. It's had somewhat a negative effect on the market to some degree. We see crude oil going down a little bit, but it's not broken down in the channel. But this is important because when we look at, let's say, other areas like energy stocks, airline stocks, transportation, which we'll show in just a second, this is kind of important. This could be a tailwind to the economy, tailwind to the stock market. We want this to somewhat top out and start to push back down. Since we're on it, let's bring up the DJT, the transportation average. Now, if we were to look at this, why do we bring this up? Well, when we're talking about oil, we bring up transportation. Well, when you look at transportation, we kind of have fallen back down to the old highs. And we're sitting here, let's say, at the new potential lows. Now, if someone is buying transportation type stocks here, they're thinking they're in the vicinity of, let's say, support. Now, you can take any position. All of them have risk. And we know that sometimes we're going to be wrong. We know that, okay? It's not a surprise. So keep an eye on some of these transport stocks. Now, these transport stocks might be what? Now, when I say transports, we're also saying, like you could say transport industrial. When we say transports, if you said, I don't know what we're talking about when we say transports, have no fear. We have a quick search that we could do. Let's go to where it says scan and just real quick scan in. And if we went down to by industry, we're going to go to the industrial sector. And this is where we're going to get into, let's say, transportation. So that's what I'm saying. This in here, it's tucked underneath the industrials. Things like marine transportation, ground transportation. Again, do not forget about the cargo, the rail. We talked about CSX and UNP. Still keep an eye on those. It does include air freight and logistics. FedEx has been somewhat bullish to some degree. Okay, so keep an eye on that. Now, if we also were to take a look at, let's say, air transportation, things like Delta, things like UAL, if some people think we're topping out, now, I'm not going to say that. Well, I'll say it like this. We have talked about that, okay? Some people, if they want to think that the oil is going to go up higher for longer, they might buy oil itself, okay? We talked about buying some energy names, kind of as a bearish hedge for the portfolio. That if the market did, if the oil did go up higher. But we could also kind of play the other side of this, which is maybe we actually think oil might be near the high, and some of these stocks might benefit from maybe oil peaking to some degree, or maybe not going to 200 or 150. So some of these stocks like CSX, UNP, etc., they're up there. Yes, stocks like JB Hunt, okay, you name it. Keep an eye on some of these. We'll come back to these in just a sec, but I want to bring those up, okay? So I think the first area that we need to pull up is transportation. Now, second, when we say, well, James, you talked about oil being down. Oil's down today. Oil is not in a downtrend, but how does it affect the energy sector? The key word is down today. It's not broken the trend. It's not reversed the trend, okay? Could the investor be long oil stocks and long some of these transportations at the same time? Kind of hedging both sides. The answer is yes. Okay. Now, let's kind of talk about some examples. Okay. Now, so you know that we talked about Chevron, we talked about Exxon, right? We talked about ConocoPhillips, and we talked about those the other day. I want to kind of start with just real quick. Let's go to just real quick an airline name for just a moment. Now, I'm in Salt Lake City, okay? And here we have the Delta hub here in Salt Lake City. I'm going to kind of go back to this just real quick. And this is a kind of an unusual move to some degree on Delta. Now, when we pull up Delta Airlines, the one thing that you're going to notice if we went to schwab.com, let's log into this. And one thing I want to do is Got to always remember that password. Let's see. It's not going to, yeah, there we go. I'm used to Face ID. Okay. Now, one thing I want to bring up is if you have a company that the consistency of the revenue is more volatile, you're not typically going to get high price multiples. So, example given, okay, when we look at this and I'm on schwab.com, I'm going to scroll down a little bit. And when I scroll down, what I want to kind of see is some of the information. Dividends haven't really varied at all. They don't pay a whole lot of dividend, which is not it's not a pushback, especially if we're looking for a company that, for example, is, let's say, growing. Okay, if we're talking about a growth name, we typically don't want something that is probably has a higher dividend than 2%. Okay, so that's not horrible. When we look at the earnings itself, you're going to see that there is some cyclicality of earnings. Cyclicality just meaning that every quarter, it's not just the same or slightly higher. You're going to see in some quarters it's just lower, okay, due to vacations and things like holidays, things like that. Now you're going to see that over time they have beat those numbers, the estimate versus actual. And when we look at this, the price to earnings, okay, ratio is 9.9. Now this goes back to my point, which is sometimes we cannot make comments like, oh yeah, these stocks are so overvalued. These airline stocks and energy stocks, they typically have a PE of about 10. The forward PE is really about 12.47, okay, which is a little unusual because that's normally lower because the earnings going forward is higher. We don't see that in this case. PEG ratio being below 1, okay? Now, if we pull this up, I want to kind of also go back to this just real quick. If we went to let's say the 3-year weekly, pull this up, this is what the chart looks like. Now, this chart almost looks like everything in the market. Not all, okay? You're kind of seeing this like V-type pattern, okay? Now, when we take a look at this, just real quick, go back to the daily chart, some people might say, oh, yeah, it's too high, okay? They always say that. It doesn't matter what you show them. You realize that, right? Everything's too high. Now, if we pull this up, we're barely above the 20-period moving average, okay? Now, the one thing the investor might do is split up the entries. What we're going to do is we're going to try to rebuild this portfolio a little bit. We're going to go back to the, let's go DAL, okay? And by the way, today we're going to do a number of trades, so just strap on in, okay? First thing we're going to try to do is buy some shares right at the current price level. So if I did buy custom with OCO bracket, okay, I'm going to put that right there. I'm going to put the stop right underneath. So let's just kind of let this sink in. Sometimes we're going to be wrong sometimes. Okay, so say it out loud. Sometimes I'm wrong. Say it out loud. I can't hear you, so I'm not going forward until I can hear you. Sometimes I'm wrong. Sometimes I'm wrong. Sometimes I'm wrong. Okay? Don't take it so personally. The thing is we don't know ahead of time is, could there be upcoming news? Could there be other investors that cause the price to go down? No one can know that. No fundamentals is going to tell you. No technicals is going to tell you. If JP Morgan Chase has 1 billion shares and they decide to sell it tomorrow, you don't know that ahead of time. Okay? All right. So now we're not going to take it personally. So if we now look at this and say 68.52 being that open price less 2%, 67.14. Okay, so 67.14 data GTC. Now, the one thing what we're going to do in this case is I'm going to go back to this prior high. Now, if you're like if you look at fundamentals, can you also use technicals to overlay some of your views on maybe where the macro or the fundamentals might go and use technicals? Oh, of course. Now, if I went back to this prior high, okay, and we took a look at this, I'm going to kind of use these bodies of the candles, and I'm going to use that as the resistance where I'm going to draw the fib from, go down to the bodies of candles, multiple touches. And if we looked at that and said, if we were to set a target, that target might be in the vicinity of 85.42, okay? 85.42. Now, we got to think about the position sizing here, okay? If we said, look, we normally buy, let's say, up to 10%, that'd be about $4,700, $4,800. So if we're saying, look, I'm going to buy half position here, I'm going to go in here and say, look, I'll buy half position, 2,400. Okay. Now, when we do this, how many shares is it? 33 shares. Clearly, if someone is actually buying airlines, they think actually oil could be topped out, okay, and or maybe starting to go down. If oil goes down 5, 10, 15, 20, you might see those airlines push. Now, a lot of times people say, well, I like to buy in a pullback. Well, it's had a pullback. Here we are. Now what? Okay. We're going to talk about it. We're going to trade it. Okay. So now when we take a look at this, I'm going to first entry is going to be at the current price level. We're going to go second, go confirm and send. Got a target price and a stop. And that stop is saying if we go to that price or less, sell the position. Okay. Now, again, everyone, what do I want us to say? Sometimes we're going to be wrong. It doesn't matter sometimes. So let's say someone was up 20% for the year so far. Did they have some winners? Sure. Did they have some losers? Sure. At the end of the point when they said, here's what I'm up for the year, they don't remember the losers because they were just in a some gain, some lose, and the net is what? That's all they want. Okay. So you look again, you're not looking at what one's won or lost per se. You're just looking at the net effect is what? Okay. Looking at the dollar gain or loss, the percent gain or loss on the portfolio, some win, some lose. There you go. Now what I'm going to do is go stop, and that stop is sitting right underneath today. Now, what I'm going to do is I'm going to set an alert right at the midsection. Why at the midsection? Because we went over that. If we fall down to the midsection, if we get a red candle intraday, I'm going to put an alert. An alert is not an entry to get in. It's like an alarm clock. If we go at or below that price, create. Now you're going to see that it's sitting right there. Okay? And so now if we go at or below that price, get it. It's an alert to consider to maybe try to buy more on the dip of the price action. So trade number one is if oil does fall, we're going to try to actually see if we can't get in an airline trade to try to take advantage. The multiples are not high. They're lower because you don't typically have consistent revenues. There's cyclicality in it, okay? Now, the other one is if you said, oh, look, I'm from Chicago or Chiberia, Illinois, you're going to see that UAL it's down. It's still near that base of support, but it's some pretty unusual price action here today. You don't normally see 8% moves when oil's gone down $3. Keep an eye on that. Now, if we look at Alaska Airlines, are we getting a push? Same push, percentage-wise, but beaten down. And if you look at Love, Delta's the strongest. Am I missing anything? Tell me if I'm missing anything. Okay, so we picked the one that kind of was showing a little bit more relative strength. Now, the comment from James L says, look, at the panic candles based on the CL news, do they not hedge fuel costs? So my friend was a couple years ago, he was the person or one of the people that actually bought fuel ahead of time for the airlines. So the answer is, do they hedge? Sure. Does Delta Airlines down in Atlanta actually have their own fuel tanks? Yeah, they do. Okay. It still doesn't mean that they're not at risk of those price movements because over time, those hedges, if you want to call it that, the time evaporates. And if that time evaporates and prices of oil are higher, what it actually does is it influences what they actually have to offer the fares for and so on and what the profitability is. Okay. So sure. Okay. So now the comment is from James L. Delta's range bound. Well, that's where it is right now. Okay. So when someone, for example, you got to at least kind of say, what does the moves look like before they really move? So sometimes people will say, look, I'm waiting for the breakout. But then when it breaks out, the same person says it's too high. Okay. So what the investor is trying to do before the breakout is they're trying to buy on the dip before the breakout. All right. So what does the dip look like? Well, you're going to see that we actually had a high, falls down, runs to the upside. The dip is where we get the red candles. The buying of that dip in the price action is where the turns, if you will, are really where you get that red, selling pressure, green, starting to go up. Now, when it starts to go up, guess what people say? It's too early. How do we know it's going to go up? I don't want to be wrong. All that stuff. But again, if you take any interest, they all have risk with them, right? That's what happens, okay? And they'll always say, well, we don't know what's going to happen. You could say that anytime, okay? Again, how do we know where the dip is? The dip is the red candle. How do we know when it's starting to actually try to go back up? Red and green candle side by side. Guess what? Red and green candle side by side, okay? So if you take a look at this, we kind of see what? 3 higher lows. So what's the strategy? We're trying to buy ahead of a potential breakout. Does someone have to put their entire position on at once? No. What did we show? We did a half position. We're trying to buy if it dips down to the midsection. The problem is with that is, wonder if it doesn't come down to the midsection of today's candle. Well, it could break to the upside. So we got to be aware that, yeah, we like to maybe consider buying on the dip in the paper money example, but sometimes if it doesn't fall down to the midsection, that's not a bad sign. Okay? Now, here's the thing. Some of you are like, James, when you talked about how do we know it's going to go back up, wonder if I'm wrong. Look, we're counting on that we're going to be wrong. If we didn't think we were going to be wrong, why would we position size? You put that together? You get it? Okay? All right. Now the other comment is, Kelly says, buy the breakout. Now, what I'm going to do is I'm going to say, look, I'm going to put an alert. This alert is at 75.91. I'm going to put it a little bit slightly above that level right there. And I'm just going to say, look, if we go, let's say we don't fall down, we shoot to the upside. Now, this is what's going to happen. The same person that says what they said to me is now going to say, well, geez, it would have been nice if we bought the dip. But when I talked about buying on the dip, then you actually said, well, we don't know it's going to break out. Wait for the breakout. You realize what you're doing. You're trying to play both sides without doing any position. Right? Now, what I'm going to do is I'm going to set an alert on both. If we get the dip in the price, I'm going to try to add. If we get the breakout, you're going to see right there, right click on the chart, 75.28, we're going to try to add again. Of course, if it breaks out, the investor is going to say things like, geez, it would have been nice if we could have bought. Okay? But remember, when you're buying after red candles, you're now, people think that that's horrible, that you're buying on red candles near the area of support. And I want to go to the second example, okay? You got to remember is, let me use this as an example, okay? One of the stocks we talked about was Goldman Sachs. And if we look at Goldman Sachs, it still has that same V pattern. The V pattern does not say it's guaranteed to break out. The V pattern just says, hey, we had a high, we fell back down. The people use the selling action to get back in. Now, if they're willing to buy down in this trough, and you got to ask why. Why would they be willing to buy based upon a broken support? I mean, with real money, not monopoly money, okay? If you're willing to buy based upon a broken support, that is probably the most bullish thing that you could see on a chart. People are buying on broken support. Well, this is where it goes back to not everyone's trading on a one-year daily chart. Not everyone's using technical analysis only. If they think that price breaks down on a one-year daily chart, but there's fundamental value, they might say, you know what? We might be able to buy the stock at a lower price and it's more attractive given the current fundamentals and the forecasted fundamentals. Okay, now, this support level is right around 880. Okay, now that we had another support level right around, let's say 900. The 3 days in a row, we've had 3 pullback days. 1, 2, 3, count them up. And then all of a sudden on the right-hand side, doink. Okay, now, what I want to do just real quick is kind of talk about buying on the first go hold day on with red candles. Okay? Now, why do people do that? Why do people try to get in? It's a simple answer. It's a mathematical reason, okay? So if we looked at today's price, let's say the current price. Well, that current price in our second trade example, 963.08. Well, where's the support? Well, that support, if we said, where do we see it? Probably, let's say, right at 921. If we set a stop, okay? Well, that stop, if we took 928 less 2%, it's going to be 902.58. If we're talking about dollar risk, okay, dollar risk, that is going to be the difference between the entry price and the stop price, which is $60. This $60 doesn't mean anything because, well, we need to express it on percent. Okay. So we're saying what percent is that? If we lose a forecast amount of $60 divided into 963.08, that's the number we want to get to. So yes, we need to know the dollar amount, but what we really want to know is what's the percentage risk. Okay. It's 6%. Now, let's say example given, someone says, don't get in because we don't know what's going to happen. We're not at the brand new high. I'm going to buy in the brand new high. Let's all of a sudden say the stock goes to 985. And now all of a sudden the risk is higher, the percentage is higher. Okay. Now, if what happens if the investor says, I'm going to wait for a breakout and a bounce. Now, let's say it goes up to 1,000. And all of a sudden now, as you're saying that, that confirmation is not free. Okay. So whether they buy at 1,000, they buy at 980, they buy at, let's say, 963 and change, they're taking risk on every one of them. Do you realize you're in the business of taking risk? That's what the investor's doing. Okay? Now, how do we know it's going to go up? Nobody sees on the right-hand side. No one. Okay? We don't know ahead of time what orders could come in a week or 2 weeks or 3 weeks. No one knows that. Might they have a suspicion of what could happen today, tomorrow? Maybe. Could. But they don't know that for sure. Okay? And so here's the deal. If we were to look at this and say stop, that stop is going to be at 902.58. 902.58. Dated GTC. Dated GTC. Now, if we look at that target right there, what do you think we're going to do? Now, wait, hold on. Let's go back to this just real quick. What about those fundamentals? Okay? Now, if we pull this back up, now, I want to kind of say something, and if you don't laugh, I'm going to my feelings are going to be hurt, okay? So, looking at the chart is like the outward appearance of a person, him or her, okay? Technical analysis is just the visual. And by the way, is the visual powerful? I don't have to answer that. You know the answer to that. The fundamentals, though, if you said, look, I'd like to maybe consider dating the person or marrying the person, you want to now know the fundamentals. You want to ask that question before the I do, okay? At least before. Now, if we take a look at this, I remember, you go ahead and laugh, okay? Now, if you're not laughing, you probably wish somebody would have told you that ahead of time. Now, if we pull this back up and said, Goldman Sachs, what do we got here, okay? When you pull up Goldman Sachs, again, we're not just buying ticker symbols and pretty charts. We're looking for pretty charts, stocks that are upward trending, but they have some fundamental backing to them. Why does that matter? Well, because if those stocks actually go down, we want other investors to see potential value in them, that they're real businesses, not just stock charts, okay? When we scroll down a little bit and say, what do we got here? The dividend, this is different than what we actually saw before in Delta. The dividend's gone from 3 to 450. Now, does all people look at dividends? No, some people don't even care. But some people, they like dividends. Dividends are not guaranteed for timing or they're not guaranteed for indefinitely. They can change those. But you're going to see the annual dividend is still not more than 2%. In my mind, when I think about something that's growth or not growth, if you're paying less than 2%, you're probably more tilted towards growth. The company is not sharing a higher percentage of their earnings in the form of a dividend payment to create savings for their own company and for themselves and future potential investment. Okay. Now, if we also look at the upcoming earnings, we can actually kind of see what is the guide going forward. It is a forecast. It's not actual. And when you look at the historical, they've actually had kind of a stair step of over time where those earnings have actually been fairly decent. Oh, it's too high. It's the price of the high. So that way it must be overvalued. Now, PE doesn't, any price multiple is not going to show you really if it's, quote, overvalued. the PE is just a trailing earnings prices now, but it's just going to say, look, if we had about 16-ish years of the earnings currently, then we would get to the price. The lower that number, it's less of a hurdle, if you will. That forward P is only sitting at 15.65. The peg is actually only literally, now that's the forecasted earnings, okay? It's only at 1.5. So when you look at a company like this, we go back to this there. We're going to kind of go back to kind of looking at that same idea. Now I'm going to back this chart off 3-year weekly, and this is what the trend is showing, okay? Now, if we went back to this, and I'm going to take this off, if I said I don't even know how to spell Fibonacci, okay, but all I know is how to draw like maybe a trend line. Well, if I went back to a trend line, take nicking these old highs, sometimes, not all the times, sometimes that actually might be where if the price did break out to the upside, where might that stock try to go to? Well, if we actually said where might it try to go to, let's say 1039 or so. All right, now here's the thing: what is Goldman Sachs in the business of? What are they at risk of? Okay, so let's go back to analyze for just a moment, and let's kind of think about this ourselves. So Goldman Sachs, okay. Now I'm going to kind of show you this and kind of see what we mean. They do financial services for corporations, financial institutions, governments, individuals, banking, asset and wealth management. Now remember, many of these markets on a domestic international basis, they've been going up. So do you think they might be somewhat correlated to that? Sure. Okay. They do advisory services, strategic advisory assignments. Now here's the thing: if you're sitting in a lower VIX environment, there's probably a lot of potential customers that might say, look, we'd like to have a little help or whatever. Mergers and acquisitions, I haven't seen a ton of that, okay? Also, we're seeing on this mortgages, loans, hello, okay, and many other things. So sometimes you kind of have to consider, they also do actually credit cards. Goldman Sachs actually is the credit card for Apple credit cards, the backer, okay? Not sure if you knew that. But if you look at that, you're now going to see on this is, you got to think to yourself, if you're in an environment where the business could maybe perform better if you have market conditions to help, I'm going to put that at 1035, okay? So you got 1035 right there. Now on the weekly chart, many investors like to see flags. Well, remember what I said about higher lows? Remember I kind of said red candles are the pullbacks, green candles are the start of the up move, okay? Well, do we see a red and green candle side by side? Now, I want you to repeat what I just said. Red and green candle side by side. Why is that significant? Well, because that's the higher low, okay? That's your higher low right there. Red, if you only had 1 week of a red candle, then followed by green, well, okay, that wasn't much of a selling pressure. Now, if we look at this is where we are so far in the week, and here we are on Wednesday, someone pointing at me, someone was just randomly right at 9:22. Now, we pointed this out so many times how it's just like, is it random or is it someone doing actual strategy? You answer that question. We think it's strategy, okay? But if we said, look, where's that area of support? Go back to the 1-year daily chart. That area, if I said Seaport, let's say what was the number we actually had? Let's bring back up the little sheet of paper. We said 902, well, 920 was support, 902.58. We're going to type that in there, okay? 902.58, there it is right there, okay? Now, any questions with that? Okay. Now, I'm going to bring this up just real quick. Now, position sizing again. If the investor said, look, I'm going to take a full position. Well, full position for us, given this account size, it rounded up, it's going to be right at $4,800. $4,800 is about 5 shares of stock. Why? Well, because it's about $1,000 $1,000 stock, okay, per share. There it is right there. There's the number of shares. Remember how the stop works. If it goes to that price or less, sell the shares of stock. If we do that, and it could fill at a lower price level, send it. Okay. Now, the other company that's kind of in a similar boat, if you will, is MS. MS, Morgan Stanley. What do they do? Well, they might be in a. We went to, let's say, analyze for just a sec. Let's just pull this up so we're clear. MS, Morgan Stanley, kind of looks pretty similar. Financial holding company, corporations, government, financial institutions. I guess this looks like we're reading actually Goldman Sachs. Wealth management. Okay. Now remember, if those clients' account values are going higher and higher and higher, and they make a percentage of those account balances and or profits, okay, well, it might push up their fundamentals. They also do the underwriting of debt, equity securities, and other things. And they are also going to be, in this case, they do loans and many other things. So what you're now going to notice is if we brought back up, let's say, Morgan Stanley, what does this look like? I'm just going to, I think when we look at Morgan Stanley and Goldman Sachs, there's similarity. That's what I'm saying. And there's some slight differences, sure. When you pull this up and look at this, we don't see the dividend being as strong as actually what we saw in Goldman. When we actually take a look at, let's say, the earnings, we see Goldman on an earnings per share basis is at a different level, but it has the same trend overall on the actual earnings. PE, we're not seeing drastic differences here on PE, Forward, or PEG. Okay. Now, I'm not going to do Morgan Stanley, but if you look at those charts and said, is maybe Morgan Stanley technically a little stronger than Goldman Sachs? Well, we could say yes to that because 5 days ago we had Morgan Stanley at a high. Okay. Now, any questions? Now, I want to kind of go back to this just real quick. Okay. If we also look at just real quick, and let's kind of show some stocks. If we brought up just a couple stocks, so we brought up, let's say, trade example number 1 was Delta. Trade example number 2 was Goldman Sachs. Flag, asterisk, Morgan Stanley. Could those actually maybe be going up together? I do want to make mention, we got NVIDIA that has earnings today, okay, after the market. I think the other one that maybe the investor might flag is Amazon, okay, long tail yesterday. How do these move? How do these sometimes start? Well, when you go from, let's say, sell-offs to where you start going up again, sometimes you can see at the bottom of like inverted hammers. Sometimes you can actually start to see hammers, okay? And that can start the shift from where the moving average was red to green. All right, now, I'm not going to do a paper trade on that because we have that example, but the biggest actually thing is, I think, if we start to see also, number 1 is inverted hammers, 2 of the main ones, not the only ones, bullish engulfing, piercing lines, so on. What candles start to cause that price to maybe go back up? The 4 I just mentioned. If you get the price above the short-term moving average, the chances that short-term moving average goes green becomes higher. Okay. Probably a stock to really watch is also Amazon. Could you get a bounce? The other one to make mention of is Apple. After Apple's move here, this low to high, okay, this movement that we've seen in Apple in 34-ish trading days was 21%. Now, it's what you call trend. It's what you call momentum, okay? Keep an eye on that to see if it can't continue. Go back to the weekly chart on that, 3-year weekly. You're seeing that this was a breakout already. On an intermediate basis, we had 1 week, 2, 3, 4, 5, 6, 7 weeks of upshot. And so far, not much of a give back. Okay. So here's the thing. If you're looking at brand new stocks on a daily basis every day, be very, very careful. The first time I ever looked at Apple was at $13 a share. Most investors probably wish they did not have as big as watch list because they were looking at the ones that had big trends, okay, over time. So now the one I do want to make mention of just real quick is Marvell. And if you look at a stock like Marvell, we've kind of had a little unusual move. Now, Marvell, we talked about this probably a month ago. We looked at a stock and said, one of the stocks that's in the group is Marvell. Now, I want to speak to this just real quick, okay? The one thing is we don't know on earnings is what's the reaction going to be? It's not necessarily what the earnings were per se. Sometimes you can get, let's say, a company or companies, example given Target, where we don't know that there could be JP Morgan, Wells Fargo advisors, all the above, where they say, look, we need to free up some capital. We're changing our allocation, and they could be using earnings the day itself to try to liquidate some positions. Now, there's a whole lot that goes into that comment, okay? Example given, Target, they actually did release some better than expected actually news, okay? The estimate was 140, the actual was 171. The $1 million question is, why does the stock go down on positive earnings? Because remember, they could have already known ahead of time which stocks they were going to sell on earnings. On earnings is you tend to get the spike of volume. Why does that matter? Because if you're trying to sell a position, you're trying to use that volume for yourself to get out at more favorable prices or when the price might be less hurt by it. Now, this is why we say around earnings, be very careful about setting tight stops. Be very careful about putting on full positions on. This is why some people cut the position in half to try to weather that potential selling pressure. Why do I bring that up? Well, Marvell has earnings coming up. Now, the thing I'm going to say with really Marvell is this is coming up in a week. We actually have what type of candle here today? Well, the type of candle that we actually see right here is a piercing line. Well, we get a red candle, pretty big one, okay? And then we go the very next day, piercing line. What do we see here today? Gap, okay? Now, example given, if the investor were going to say, well, James, is this too high? We go to the ruler. The ruler for our example is using the envelopes. If we were trying to buy a little bit closer to support, the highest that we would show the example is right at the white line. The white line represents 7% off the 10-period moving average. Okay? Now, if I did that trade real quick, buy custom buy custom, and I'm going to go with stop. Now, what I'm going to do is, wait, what's the purple? Okay? The purple is 2% below. Now, for just quickness here, I'm going to put that stop right at that 2%. Okay? So on the right-hand side, we can actually see that fuchsia color there, 171.25. Okay? And now what you're going to see is right there that price, it's moved on us, and I'll change it. There it is, 171.19, and it's moving on us as we talk about it. Okay, 171.18 stop dated GTC. Okay, now what I'm going to do in this is we're going to put on a half position. Why a half? Well, we're a little stretched. This is a buy limit order, and by the way, if I put this order, we're saying buy at that price. That's not what we're doing. I just want to make sure you're following that. We're saying, look, we need to buy at 186.85. Did you catch that? There's a cap on what we're willing to buy that for. Okay? That's why the limit there, 186.06 and 171.18. You almost fell for that, didn't you? Okay? No, you didn't, because we've talked about that. If we did a half position, there it is. Now, the con about this is we don't know if it's going to fill today. We don't know. We don't know if it's ever going to fill. We're saying, look, we want to buy, but not buy any higher than the white line, 7% above the 10-day exponential. Stop sitting here down at 2% below suspecting, not knowing, suspecting that 10 period might be a potential level of support. Now, if we go back to confirm and send, there it is. Now, I want to show just visually, not doing a trade because we have to wrap it up. One other stock that the investor might keep an eye on is GLW. Okay. Now, someone might say, this is nuts. There's no, why? Well, because sometimes you had a high and you've now fallen right back down to where this old breakout was. Okay. Checking back. And we saw this before where it checked back. So keep an eye on also GLW as well, which has actually fundamentally been quite strong. Had really some drivers as well. And the trend, let's just say, has been semi-bullish over time. Could that continue? I'm out of my time here today. We got Ben Watson coming up next with managing an option portfolio. We did 3 trade examples here today. Keep an eye on some of these things we talked about. I think the goal of every investor is actually to have, let's say, some stocks that have trend, but also have some fundamental drivers and consistency to it. Thanks so much to Connie for answering those questions in chat, and thanks to all of you. There is a survey in the chat. Click on it. It's just 2 questions. Thank you in advance for filling that out. I always love to actually read your comments. And with that said, remember with what we discussed here today, it was done for example, illustrative purposes only. And also remember that all investing, as we talk about here today, has risk associated with it. And with that said, remember that this has been really focused a little bit more on growth here today, looking to see if some of these stocks might continue higher after a brief pullback. Thanks so much. Stay tuned for Ben Watson coming up next. Bye-bye.